What's going on, guys? Back with another video, and today we're going to talk about AMC stock. And today, instead of Uncle Henry, it's King Henry, because, not only am I a king, I'm going to show you how to be a king with your money. All right, so let's talk about AMC. AMC is a very interesting stock, and I specifically see some opportunities now because, COVID-19 pandemic has been a challenging time for entertainment industry, and AMC was no exception. And this stock went down quite a bit, guys. I mean, if I take a look right here, you can see how this stock went down to the dumpster, but now I specifically do see some opportunities, and this stock has some insane implied volatility. And implied volatility is an option trader's friend. I'm telling you, in terms of its options, the options look extremely juicy, and there's quite a lot of heat that you can catch here and really jump in with the momentum and make some really short-term stacks of cash, all right? But there is a lot of important things that you do need to consider because this stock is, again, it's volatile. I mean, just look at the 6-month chart. There has been a lot going on, and specifically in 2020, the company's revenue actually dropped by 89% compared to the previous year. And as short sellers shorted the stock, and they just put so much money into shorting it, and that's really risky. AMC actually experienced a similar stock explosion like GameStop did in 2021 because the community on Reddit, Wall Street Bets, and all the so-called apes bought the stock regardless of all the shorting, okay? I mean, if I look at the statistics right now, you guys can see that when I look at the short interest, you can see that there's currently 22.8 million shares short, 11% of the shares outstanding. So again, there is a whole lot of controversy on the stock, and that's why the implied volatility is so high. I mean, if I look at AMC Options right now, I'm going to show you how much opportunity there is to make short-term money. Of course, you have to be right on direction. All right, so let's go open up the 7.5. 132% volatility. Now, this would not be my main strategy. This would be a side strategy. This would be a side strategy where essentially I put some money into this and kind of, just hope for a really big multi-bagger return, because AMC actually peaked at around $70, hundreds of percent gain in only a few months, and then it dropped ever since then, right? In 2023, the return has been negative over 70%. All the apes, right? All these so-called apes that are just jumping in, trying to make that money, they still believe in a short squeeze, even though the current stock price tells another story. Right? Look at the September 22, the CEO, Adam Aron, introduced a dividend AMC stock called APE. Okay, to raise more cash, he diluted APE to keep the company alive. And almost 1 year later, the reverse split happened. AMC and APE combined are now worth $7 and, about 90 cents, right? So this stock are worth about $7. And, even today, look, the stock is jumping up 7%. I mean, just catching in 1 day swing, you're getting quite a bit of a return. So this is a really good strategy, especially for some of the swing traders. Some of the more active guys, they're just basically printing money here if you can, correctly jump in on the momentum. Like, you have to be careful. But again, 7% return in 1 day is wild. So if you end up dividing AMC at its peak by 10 because of the reverse split, we received a share price of almost 80 cents. So, this stock looks like a really good bargain at these levels. And the current situation basically looks like this. To raise more capital, CEO Adam Aron introduced a dividend AMC share called APE in 2022. And, after nearly 1 year, both stocks, AMC and APE, plummeted to the ground. Conversion of both stocks and 1-to-10 reverse split are the reason for today's share price. That's why most AMC investors are underwater with the average stock price of, like $30, $40, $50. I mean, people were paying absurd prices here. And, before the reverse split, because of the conversion and dilution, it's not 100% the same anymore. AMC is at an all-time low. AMC still faces a lot of debt. That's why the company needs more revenue, and it needs more money, and it needs to prove itself. I mean, for it to come back, if I look at the 1 year stock price, for it to really come back to these levels, it really needs to start pumping in more cash. It needs to start seeing some, revenue hit the bottom line. It needs to become, more profitable, clearly. And, this position for me, I mean, I wouldn't really put more than 5% of my money here. This is more of a YOLO play, but, I've been getting some folks just asking me, what are some more of those YOLO plays? I want to build my wealth faster. I want to make more short-term money. I want to swing trade. I have some, play capital, and that is totally fine. I agree with that because I did make a lot of my money on Tesla. I mean, I was very positive on Tesla, so that's how I made $100,000 into $700,000, basically doing put credit spreads on Tesla. However, I was very confident. I was going for very high delta. So I was breaking rules. I was doing like 50 delta on Tesla. I was, buying some call options, buying leaps. I was doing a whole bunch of interesting strategies on Tesla. But I think AMC is another one of those names where if you catch the fire correctly, you'll really heat your wealth up and you'll grow it. So in terms of fundamentals, that is really important to me, right? I was an analyst on Wall Street. I have quite a bit of experience looking at stocks and individual stocks. So fundamentals in general, they changed for the better. So in Q3 2023, earnings, they were reported not that long ago, and the earnings look like this. The total revenue grew by 45% compared to Q3 in 2022, $1.4 billion. And the expectation was $1.26 billion. So the earnings were beat, and the total revenue is finally going up, so people are going to get their entertainment again. Diluted earnings, so loss per share improved by $2.28, okay? From negative $2.2 to positive 8 cents. Guys, 8 cents, we're in the positive now, okay? So that is a big deal because even looking at Amazon, they were running at a loss for such a long time. They finally hit a profit, the stock skyrocketed. So I think something similar can happen with AMC where the stock can skyrocket because finally it went from huge negatives to a little bit of positive. So looking at movies like the Oppenheimer and Barbie, this caused a really huge revenue increase, okay? Because people are going to the movies again. They're starting to consume that entertainment, and that's good. The outlook for Q4 2023 is Taylor Swift and Beyonce concert tickets, and you can watch the concert in the cinema, exclusive partnership with AMC. And I think will result in good numbers, but maybe not as good as Q3 2023 because of the lack of, many, AAA movies. But instead of, celebrating the huge beat in the earnings, actually, the CEO announced that the dilution of more shares, the reason for the recent surge in the stock price. He wants to gain another $350 million. So, a whole bunch of interesting stuff is happening with the stock, which is, a lot of catalyst for movement. And that's why specifically, I think, doing some interesting strategies on AMC, whether it's, buying some call options, getting in on a swing, I think this is what I would be doing with my play capital. I mean, I don't have that much play capital myself because I'm very comfortable and I don't have that itch to play with my money. But, then again, it doesn't hurt to make a big swing. It feels really fun sometimes to catch a big win and just celebrate it. So AMC is a high risk, high reward play because we don't know when AMC will be done with diluting shares, but we are currently at an all-time low of a fundamentally stronger company in comparison to where it was in 2020. This is a lot stronger of a company. The picture is finally more clear. So since we've came out of the COVID times, now people are coming back in. I think the trend is finally more positive. And selling cash secured puts can also be a good way of building a position in a stock that you want to keep in your portfolio. So let's say that we want to jump in here. I would go to sell put. I'm going to tell you some pros and cons, by the way. So, I can do a short-term trade. I can do a longer-term trade, okay? I can go out any length of time, actually, because you're getting compensated for the degree or the length of time that you are pursuing. So if you check this out right now, even if I sell a $6 put, the return here is ginormous. I mean, in just 51 days, you can see how the return here is over 10%. I mean, 10% of $7 is 70 cents. This is 80 cents. You're getting over 10%. So, just for example, I'm going to go ahead and sell a contract here. Just want to make sure that I'm doing as I say, because I do have some belief here, although I don't want to have too big of a position as I don't currently have that much cash. You guys know I'm quite heavy on a number of stocks like Apple. Anyways, there we go. I made one sell here. So this is an AMC cash secured put. That was just an example. You see how I did that so quickly? It's because if AMC goes below 7, I am going to be committed to buying 100 shares of AMC. Now, I want to talk about the positive argument for AMC, and I also want to talk about the negative argument. You really need to understand how to manage this position because this is an important one to manage. So on the positive side, people, they like movies. They like cinemas. Guys, we all like to have fun. We all want to have that entertainment. So, and also just looking at investors out there, which, I'm going to call apes for the AMC crowd, apes are still holding or still hoping for huge gains in the stock price. They're still averaging down, guys. There's a lot of support in this stock because people are still buying it. People are literally still buying it because they have a lot of belief in AMC. And again, it's at an all-time low. I mean, there is a lot of support here, not just technically and fundamentally, but also just from the sheer volume of people buying. Now, of course, there's some negative, there's a negative argument. The company is still in debt. They have a lot of debt. But, then again, if you look at some of my positions in my portfolio, I'm going to go to my portfolio real quick. You'll see that I do have some stocks that do have quite a bit of debt, and specifically airlines. American Airlines, where is American Airlines? I have American Airlines and I have JetBlue. These companies have a lot of debt. There is a lot of debt in the airline industry. So I'm not really scared of that. Again, I'm not putting all my portfolio and I'm not going all in on this company. This is just a interesting play that I think can have quite a bit of return, right? And looking at more negatives though, dilution will, kind of hurt the company. Diluting will save the company in some ways, but might also destroy the share price in the short and medium term. So yes, we need strong earnings in 2024. That is really what needs to happen for AMC. So there's a couple things that you could do. You can also utilize the wheel strategy. because the premiums are just absolutely nuts, okay? And I just recently uploaded a video on the wheel strategy. I actually want you to check it out in the description. So anyways, I just want to bring up that AMC is one of the interesting plays that I'm looking into more right now. If you want to see how I'm going to play more of AMC, then make sure to hit that first link in the description and join my Discord community where I trade, buy, and sell live. Thanks for watching, and make sure that you learn more about the wheel strategy on screen right now.